Aloha, this is Joshua Hayes at BigWaveTrading.com for the October 23rd report for you to use for October 24th. The key thing to notice here is that today was actually a little bit of a bullish day as stocks sold off earlier on and then was able to rally back before the end of the day, closing near the upper edge of the range and also closing higher than where it opened on the S&P 500. Volume was a little bit higher today, which does indicate that that was a little bit of a bullish section to go on. Let's go and move to the Dow Jones Industrial Average. We can see that we see the same thing here with a nice bullish, open, move lower, and a close higher. But volume was actually lower than the day before, so there was not accumulation on the part of the Dow Jones Industrial Average stocks, which means it just was not as strong as the S&P 500 was today. Now going to look at the NASDAQ, you can see that the NASDAQ actually had a distribution day being down 0.73%. Even though there was a tail on the intraday session, which shows that there was good support as the stock sold off, the fact that it could not get back into the green indicates that it still was a distribution day. It still was pretty much a negative day overall, but it wasn't too negative, as the bullish tail does indicate that there were people finding values as the stock index did fall. Let's look at the Russell 2000 index. You see it again, down lower, down 2.4% gain, 2.4% loss, which is a decent loss. I'm not sure if volume was higher or lower by looking at this chart because the index volume is the same on it, but it just would look to me like it's a bearish and a bullish session, with the weak move lower, but the tail being right around the previous tails on October 10th, 16th, and the 10th. So the 10th and 16th tails are right around where the tail of the 23rds ended today. So that can be considered kind of bullish, but with the down date still mounting up, it's not too bullish. Let's look at the S&P 600. Yeah, the same situation. The market was down 2.7%, and we have hit new intraday lows. As you can see, the lows hit 250.13, which is lower than the 261 and the 255 on the two other low of the bar days. So the index still shows its weakness in there, which means there's nothing really bullish to buy, in the market. The New York Stock Exchange, of course, considers to look like the worst out of them all, as from the top in late October 31st till now, the index is down 45%, and it just looks bearish and bearish, even though there was a green bar today showing it close up. It barely only closed up 0.74%, and after all the negative action that came up leading into this day, I would say that that's not too bullish whatsoever. Let's go look at a bullish index. Let's look at the United States dollar index. Once again, an index that continues to look nice and strong. Let's see, the 23rd, Thursday. Something's wrong with the date there. So that shows a wrong date. Maybe I need to update this. I don't know, maybe I need to update this. Maybe there's something not updated on this. I apologize, but it's weird how this can happen sometimes. So let me go ahead and update it. But while I talk about it, I want to talk about something that happened today. Some ignorant subscriber named Joshua made a posting on my website saying that LPHI was a horrible long. First of all, it can't be a horrible long until it closes below the 50-day moving average, and it can't be a horrible long stock no longer has green volume. So I want to go ahead and put up a stock that I recently went long, and as you can see from the date that I went long, overall the chart pattern is still very pretty, and as you can see on a 2-day chart, you can see a nice rounding out action in the base and then a breakout on heavy volume right here. Now this breakout on heavy volume continued the very next day with an immediate 3% gain. And then, like most normal breakouts do, they pull back to the pivot point area. So all this stock did was pull back to the 50-day moving average, and it found support right on the 50-day moving average with the tail, and it still has green bop, and it still shows a lot of volume, showing that there was support there as it hit the 50-day moving average. There is absolutely nothing bearish about this chart at all. And until this price closes below the 50-day moving average, there is absolutely no reason you should be selling a stock like this, especially when it looked like this on a breakout, considering how many stocks are just destroyed out there. I mean, I'm just going to pull up this random one. I mean, look at what this one looks like compared to this one. And as you can see, not only is this a strong stock, but its earnings per share growth has been over double digits for the past 8 quarters, and its sales growth has been over double digits for the past 7 quarters, along with a return on equity of 123%. What is bearish about that? Nothing whatsoever. And as I said on the day of the breakout, by the next day, BOP would probably go to max green BOP. And sure enough, it did. The very next day, BOP went to max green BOP, volume increased to a higher day, and the stock rallied 3.21%. Now, granted, it has pulled back the next day, but it shows a tail, still has max green BOP, and the next day pulls back quite hardly on 11% drop, but still almost has max green BOP and still shows strong signs of support. So even from the up day, well, that's weird how that doesn't work. Okay, let me press another button. I don't know. C maybe. And we look from here to here. It's only down 9.7%. And in a bear market, that is not that bad. So this chart is still very much a beautiful chart. And that poor slob, Josh, who happened to make a comment saying that LPHI was a horrible long, obviously doesn't know what a real horrible long is, as a real horrible long looks like this. This is what a real horrible long looks like. Look at Lockheed Martin and look at what it's done since its highs in September. Since then, it has sold off 19%. That's a bad long, along with a lot of red bop, ugly price bar action, and just overall just an ugly, ugly pattern. And then you look at something like LPHI, and you just have to consider or question yourself, how can this one guy be so stupid to actually think that this is a bearish looking chart? You've got price above the 50-day moving average, green bop still, and heavy accumulation on the up days. There is nothing bearish about this chart, including with the previous max green bop, the previous tight price pattern, and you just go along with the market indexes, which are not bullish. So obviously it's not going to be the strongest of stocks, but if it starts to rally from here, obviously LPHI will do well. It's no guarantee, as the markets are very ugly. You can look at the NYSE, see it's still well below the 50 and 200-day moving average, selling off on strong volume and barely rallying on green volume. But compare that chart to LPHI. Completely different. Max green bop here, max green bop here, some max green bop here and green bop here. Tons of heavy accumulation and plenty of support off the 250-day moving average. There is no way in Hades that this is a bad chart. And for that fool that made the statement on my website saying that this was a bad chart, obviously needs to take the next year off studying charts going back to 1900, looking at the best charts of each year from 1900 all the way to the year 2008. Maybe then and only then will he realize that this is not an ugly chart. Before I wrap this up, I want to show one more positive index that tons of people are still bearish on. God knows why. And that is the United States dollar index. Look at how bullish it is and how bullish it's been since it crossed over in the August 200-day moving average. It's up 14% on 40-to-1 margin. That's right around 50% gain. So you have a 50% gain on a chart that has just been beautiful with tons of open daily price bars and tails all along the way, including heavy support right at the 50-day moving average. So as you can see, as this dipped down to 50-day moving average and people got worried about the dollar, it completely rallied back and continued to move higher, just like LPHI.